Welcome back to SpyFi Trades. Today we'll be discussing the current market situation, our SPY and QQQ option strike predictions for tomorrow, and we'll also take a look at some upcoming economic data, including the impending interest rate hike and our predictions on that. I'm your boy SpyFi, and I hate wasting time, so let's get into it. Recent economic data showing that this bearish market will continue into Q2 due to rising bond rates and rising inflation, with the soft landing looking more and more like a Japanese kamikaze coming in for the kill. We could be looking at another year of rising Fed rates for Jay Powell, who pretty much wants to see every person homeless if it means getting back to 2%. Look at me, Jerome. Yes, Volcker would be proud. Now quit acting like such a bitch and rip the band-aid off. Okay, on to some upcoming economic data releases. Looks like the Fed's interest rate decision is scheduled for March 22nd, and analysts are expecting another hike. But what's crazy is that uncertainty has crept in now, and analysts have went from 9% chance of a 50.5% rate hike to almost 40% over the last 2 weeks due to some coming market correction news. This would inevitably mean a shift from the expected 0.25% hike, which analysts initially thought would continue, and changes the downward trend of smoothing interest to another upward trend, which, in my opinion, is not being reflected in the current market prices. Additionally, the U.S. Bureau of Statistics is set to release its consumer credit report early next week, and the JOLTS report, job openings, to follow. To our SPY strike target predictions for tomorrow, we'll be watching the 393 level as the main support level. That being said, we could see some upwards momentum to the 0.786 fib level at 397.83 before we see any real down action, unless pre-market takes the plunge. A rejection of 398 could see a move down between 396.50 and 395.40, where some heavy demand will come in, so we'll pick up some 398 puts the closer we get to that 398 strike. If pre-market comes in with some heavy selling pressure, look for the key resistance levels at 393 and 392. A rejection of 392 means complete failure of the bulls and a possible step to gamma minimum at 388, but that's a stretch. Let's take a look at the Qs. This week we should see the tech-heavy Nasdaq shake away some of those gains, with investors finally seeing the darkness after Q4 earnings had investors scratching their heads at upward momentum on horrible earnings reports. 290 looks to be the hard line in the sand as bulls prepare for the last stand against a growing bear crowd. 294.20 looks to be the upper resistance at the fib 0.236 level, with 291.50 playing supply to the downside. Hello? Elon. Look, man, you gotta stop calling me. Oh, what happened Tuesday was not an accident. Dude, you can't touch my dog's butthole like that. It's weird and it makes everyone at breakfast uncomfortable. Okay, but that's the last time. No, I don't want a horse. What's wrong with you? Fuck, he's weird. Sorry, folks. Back to interest rates. Looking at the economic outcome of March 22nd rate decision could prove to be a lot larger than anticipated. A rise in rates could signal uncertainty in the markets, which could trigger some sell-offs, but economic predictions like this one from Kevin Malone at Malone_wealth predicts a 50% cut in current prices, saying, and I quote, "When yellow crayons crosses blue crayons, the stock market has dropped 50%. Buckle up." Yes, Mark, we will indeed buckle up. Not taking anything away from Mr. Malone, I just love the use of crayons to get complex financial points across simply. Anyways, folks, that's all for today's episode. Smash that like button if you found this video educational or if anything entertaining. Don't forget to subscribe to stay up to date on all my videos, and stay tuned for the upcoming options educational course that's suitable for everyone, the Classified Papers, coming out this summer. Good luck, agents. I'll see you in the trenches.